Okay, good morning, John. I hope you're doing well. So, in our previous meeting, we've discussed the transactions that needed to be finalized to generate the report for the company's first month performance. So, let's go over the two most important reports in a company's performance, which is the balance sheet and income statement. Let's begin with the balance sheet. So, as of February 28th this year, these are the current assets that we have. The bank accounts are Bank of America 0987, PayPal Australia, and PayPal United States. So as you can see, the amounts are good. And we also have prepaid insurances for the three properties that we have. So we have paid the insurance for the whole year. We will only recognize the insurance for the first month, of course, so that it's properly accounted. And over the next 11 months, we will spread the remaining prepaid insurance that we have here. Okay, the fixed assets or the properties that we have or you own are the St. George, Sheridan Boulevard, and Ralston Road. And included in here is the purchase closing costs for each properties. And for the liabilities, we don't have any current liabilities. We have paid that through the bills. And for the long term, it's the financing company A&D Mortgage, forced to account for the two properties and then the mortgage payable for the other property. So this amount, we have deducted the first month of payment for this. Okay, so for the equity, our current year earning or the first month net profit that we have is the $21,432 and $48 indicated here. Later in the income statement, we will try to dissect each of the items of the income statement. Okay, for the owner's capital, we have $468,115 dollars and 21 cents. It's kind of big because you invested a lot of money in buying the properties, those that are not covered by the finance or in the mortgage that you had. Okay, so let's go to the income statement. So for the month of February, you requested that it has to be properly tracked for the properties. So that's what we did here. So there will be 3 columns. So it's going to be St. George, Sheridan, and Ralston. For our main source of income, it's from the accommodation fare, cleaning fee income, and the miscellaneous guest fee. So for our cost of goods sold, it's the host service fee. And here below are the usual or normal expenses that we'll be incurring every month. So the first one is the cleaning expense. I noticed in the cleaning expense that Ralston has the highest one, though it's not the top earner properties that we have. Maybe we can source out a cheaper cleaning company so that we can recover some of the expense. Okay, the next one is the insurance. This is the insurance for each property from the prepaid insurance that we have set up. And for the internet, it's there. It's just the same for each property. For the legal and professional fees, we incur this during the buying of the properties. And for the meals, it's just $46.03, just like what we have finalized in our past meeting. Okay, for the supplies, it's there. Okay, and the repairs, there are some few repairs that we made with the properties, but it's not considered something so major, so we cannot categorize it in the balance sheet. I mean, it's really not an outright expense. Okay, for the software, it's just $40 subscription or just fair there. And for the travel, you said that the travel that you made should be divided into or should be spread to the 2 properties only, not with the Ralston. Okay, so you also mentioned in our previous meeting that I should itemize the taxes that we're paying. So here we have the 3 kinds of taxes that we need to pay every month: the property taxes, the state sales tax, and the Miami-Dade county taxes. Okay, so for the utilities, you also requested to have it itemized so that when you see the income statement, you'll get to identify it easily. So we have the waste management for each property, the electricity, and the gas. So you also mentioned that we should track the electricity or monitor it, the electricity of Sheridan, to see the effect of the jacuzzi installed there. So the only difference is like around $40. Maybe it's really because of the usage of the jacuzzi. Okay, so in 1 month's time, the St. George property has a net income of 3,431 and 57 cents. For Sheridan, we have the biggest contributor for net income. It's around $10,644.68. And for the Ralston, it's $7,356.23. So as you can see, like what I've said, it's Sheridan that's earning better for this month. I also like to remind you that there will be, of course, I'm hoping that we will be earning more, because the earnings that we have here is just like only for 15 days. Other days are not booked. So imagine if those other 15 days will be booked. So double the amount we'll be expecting as an income. Okay. So for now, I think this performance is good because we have a good net profit. The cash flow is good. Our liabilities are just the long-term ones. So in case you have any clarifications and some suggestions to improve the reports that we have here, just kindly communicate it with me. So bye for now, John. Till next time. Bye.